What would happen to your money if war broke out tomorrow? Not someday, not in theory, tomorrow. Most people think they know the answer. Buy gold, sell stocks, hide cash under the mattress. But here's what nobody tells them. Every single one of those moves could make them poorer. And the scary part? The people who got richer during the last major global conflict, they didn't do what felt safe. They did something that felt almost wrong. So the real question isn't whether war is coming. The question is, when chaos hits, which side of history do you end up on? There's a pattern that repeats every single time the world goes unstable. Markets drop, panic spreads. People sell everything. They move to what feels safe, and they lose. Meanwhile, a quiet group of people does almost nothing. They don't panic. They don't watch the news every hour. And somehow, months or years later, they come out ahead. This isn't luck. It isn't timing. It's something deeper. And to understand it, it helps to look back at what actually happened the last time the world thought it was ending. When World War II began, the U.S. stock market dropped sharply. People saw the headlines. They felt the fear. And millions of ordinary investors pulled their money out of everything. What happened next is almost hard to believe. From 1942 to 1945, the Dow Jones Industrial Average rose by over 50%, not after the war, during it. The people who sold in fear locked in their losses. The people who held, or quietly bought more, watched their portfolios recover and then some. That's not the only example. During the Gulf War in 1990, markets dropped nearly 20% in a matter of weeks. Investors panicked. News anchors warned of economic collapse. The war ended. Markets recovered within months and hit new all-time highs shortly after. The same pattern played out during the Korean War, the Cuban Missile Crisis, September 11th, the Iraq War. Every single time, the market dipped and then it climbed. So why do 90% of people still invest the wrong way when fear takes over? Here's something that doesn't get talked about enough. The human brain wasn't built for investing. It was built for survival. When there's danger, real or perceived, the brain has one job: get out, run, protect, escape. That instinct kept people alive for thousands of years. But in a modern financial system, it's a trap. It's because the moment someone sells everything out of fear, they've done two things. They've locked in whatever loss already happened, and they've guaranteed they won't be there when the recovery starts. Recoveries always start quietly, without warning, before it feels safe to get back in. By the time the news says it's okay to invest again, the opportunity is already gone. This is the cycle. This is the trap. And it catches smart people too. Not because they're foolish, but because the instinct to flee feels so rational in the moment. This is where things get interesting. The investors who consistently come out ahead during global uncertainty don't have a magic formula. They don't have inside information. What they have is a framework, a set of rules they follow no matter what the headlines say. It comes down to three core questions. The first, is this a panic drop or a structural collapse? There's a difference between markets falling because people are scared and markets falling because the actual foundation of the economy is broken. Most war-related drops fall into the first category. Fear drives the selling, not a fundamental change in the value of strong companies. When a great company's stock drops 30% because people are panicking about geopolitics, the company itself didn't change. Its products still exist. Its customers still need it. Its long-term value is still there. That gap between price and value is exactly where wealth gets built. The second question, what actually holds value in chaos? This is where most people get it wrong. Gold is the go-to answer. And yes, gold tends to rise in uncertainty, but gold doesn't compound. It doesn't pay dividends. It doesn't grow into something bigger over time. The investors who built serious wealth during past conflicts weren't just buying gold. They were buying into defense companies, energy infrastructure, agriculture, and healthcare. Sectors that become more essential when the world is unstable. Food, energy, medicine, security. Those aren't exciting sectors in peacetime, but in a world on edge, they become the backbone of everything. The third question, what is the time horizon? Someone with a 2-week time horizon looks at a market drop and sees disaster. Someone with a 5-year time horizon looks at the same drop and sees a discount. The world has been through 2 world wars, in a Cold War, a nuclear standoff, multiple regional conflicts, a global financial crisis, and a pandemic. And through all of it, one thing has been consistent. Civilizations rebuild, economies recover, markets climb. Not always quickly, not always smoothly, but they climb. The question is whether someone is still holding when that happens. There's one more thing worth understanding, and it's the mistake even experienced investors make. In times of global uncertainty, cash feels powerful. Or sitting in cash feels like control. It feels like protection. But here's the hidden cost. Inflation doesn't pause for war. In fact, wartime has historically been one of the most inflationary periods in modern history. Governments spend massively. Supply chains break down. Prices rise. The person holding cash doesn't feel the loss right away. It's slow, silent. But over months and years, the purchasing power of that cash quietly shrinks. That safe pile of money buys less food, less housing, less of everything. Meanwhile, assets, real estate, equities, commodities tend to rise with inflation over time. The person who felt unsafe holding assets often ends up in a stronger position than the person who felt safe holding cash. This is the invisible tax that nobody talks about, and it hits hardest during exactly the moments when people think they're being smart. So, what should someone do if war broke out tomorrow? The honest answer is probably less than they think. The strategic move isn't to scramble and restructure everything overnight. The strategic move is to have already built a portfolio that can weather storms, one diversified across sectors that hold value in both peace and conflict, with a time horizon longer than the news cycle, not built on borrowed money that forces selling at the worst possible moment. The people who sleep well during geopolitical chaos aren't the ones who predicted it. They're the ones who built something durable long before it happened. And that's the part that stings. Because the best time to prepare for a crisis is never during the crisis. It's before, in the quiet moments. In the years that feel stable and boring, when preparation feels unnecessary. Most people wait until the sirens are already going off. And by then, decisions are being made by fear, not strategy. So here's the question again, stated differently now. And not, what happens to money if war breaks out tomorrow? But, what kind of investor does someone want to be before tomorrow arrives? The one who panics when headlines scream danger? Or the one who spent years building something structured, diversified, and patient? So that when chaos hits, they don't have to do anything at all. History already answered this question, dozens of times. The market doesn't reward the most scared. It doesn't reward the most confident. It rewards the most prepared. And preparation isn't a talent. It isn't luck. It's a decision, made long before the world starts shaking. The investors who came out ahead after every major conflict in modern history had one thing in common. They understood that the question was never about war. It was always about time, discipline, and knowing what actually holds value when everything feels uncertain. If this changed the way you think about money, even slightly, that's the point. The financial world moves fast, and the people who learn how it actually works, while everyone else is reacting to headlines, are the ones who end up on the right side of history. If that kind of thinking matters, there's more where this came from. Hit the subscribe button and touch the notification bell so you don't miss out when they drop.